Good afternoon, traders and investors. Will back here with another one. Hope you guys had a beautiful weekend and happy holidays to everybody. So our bull march continues north here. SPY and QQQ in the green once again today. SPY up 0.56%, QQQ up 0.43%, and the march towards the all-time highs continues with no signs of bearish reversals in sight. So guys, today we are going to cover our major indexes, of course, our major tech names, and we don't have that many earnings today, actually none today. Tomorrow we're going to be covering a couple. I do want to cover FactSet and FedEx later on in the week. We will be doing Micron on Wednesday here, and on Thursday we will obviously be going over the big one, which is going to be Nike. Very curious to see how Nike does, and if they do dip, I will be building a bigger position here. So with no macro and no earnings today, guys, I wanted to spend the first couple of minutes on a bit of call option education here. So we're going to be looking at how I choose my positions for call options, more specifically for leap options. So these are call options that have a time to expiry with at least 6 to 12 months in the future here. And I do believe this is a great market to be shopping for some longer term call options now that we know that 2024 should be a fairly bullish year, especially with rates coming down. There is still a risk for a very slight mild recession and economic slowdown, but that can be met with the Federal Reserve reducing interest rates. So should be able to offset each other in terms of market sentiment. So without further ado, guys, let's get right into today's video. Now, in terms of the market here, guys, beautiful rotation continues here. So you can see Apple and Tesla slightly down on the day. Tesla was actually up on the day, but giving most of its gains back in the later part of the day. But we had some very good gains here, notably by Google, Meta, and NVIDIA. NVIDIA presently pushing towards the all-time highs here. Slight little pullbacks here, ever so slight in healthcare and financials, but still holding their own. Overall, guys, very good rotations in the markets. On the one-day relative performance, you will see that everything pretty much once again in the green, except for utilities and real estate, but very, very, very healthy rotation in the markets, and that's exactly what you want to see. On the one-week relative performance, everything still notably in the green. Few tiny little red flags, and that just remains to be seen how we are going to play in the RSI level. So we'll cover that in the technical analysis part. Only red flag is that the RSI on the indexes, SPY and QQQ notably, are getting slightly, ever so slightly overbought, so may be due for a slight little pullback. Remains to be seen if we can eclipse the all-time highs before that pullback, or if we're going to pull back before and then smash the all-time highs leading into the next few weeks. So let's get into the call option segment right away before we do a bit more technical analysis. So how do I pick my call options? Well, let me just start by saying it all relies obviously on the VIX. So a big part of options is what we call implied volatility. How much implied volatility is baked into the stock option expectations. And that's just basically a fancy word of saying how high or how low can the stock move in a given time frame. If the stock has been relatively flat recently, the volatility of the stock will be relatively low. If a stock has been going 5% up, 5% down, 5% up every single day for the past couple of weeks, the volatility on the stock will be high, and as a result, the options premiums, the price you pay for options when volatility is high, is going to be higher. So number one indicator here is the VIX. The VIX is currently very, very low. So that's why I do say that is a very good time to be shopping for call options. You'll notice the red and green boxes. The red is where I like to go shopping for options. The green is where I usually like to sell options for spikes of overall market volatility. Really add some juicy premium to your options. So now's a good time to shop. Now, which stocks do I pick? Well, I'm looking for growth stocks that are currently notably still off their all-time high, that have positive, mostly positive EPS and revenue growth here. And we're going to take a look at a couple here. So I'll give you guys a couple of the plays that I'm looking at. Number one is going to be Fortinet. We've covered it a few times on the channel. This is a cybersecurity play, currently very close to my support area. This green box here, 55 all the way down to about 46. Very nice weekly trend breakout as well. I'll show you that, guys, on the chart right here. So you have a very nice weekly uptrend that's just started and currently pulling back ever so slightly on the day. So if we do retest this little area over the next few days, I will be shopping. Now, that's key number one. Shop for a stock that's still decently off the all-time highs. So Fortinet still 31% off the all-time highs. Overall, and a very beautiful macro uptrend here, and very good fundamentals here, guys. They're growing at a very fast pace for the next 5 years, and that is what I like to see. And the company is indeed profitable. So that is also a very big criteria. Once we have those fundamental and technical criteria down, you want to be shopping for a few things here. Number one that I like to check is the historical volatility of the stock. Is it in a current time where volatility is low or high, like our previous discussion? So you can come on to Google here, and Alpha Query does a pretty good job of showing you the most recent implied volatility of the options here. So this just means how volatile has the stock been in relation to its history. As you can see here, we are currently very low in terms of the stock's history. You can see this chart goes all the way back to 2021. You can go even further if you want, but 2 years, even six to 12 months is plenty. You can see that it's currently trending at the lower end of the implied volatility range, which means the options premium, the premium that Wall Street is baking into the options for volatility is very, very low. So this is a good time to be shopping for them. So that's criteria number one. Implied volatility is low. Now, which strike price do I choose? Do I choose the 60s? Do I choose the all-time highs? Do I go in the money down in the 40s? I always like to personally play in the money, and more specifically 80 delta. So if you take a look here, right, we're going to be shopping. Most of your brokers will say that you'll just go down to the strikes here. And I like to go at least a year out, 6 to 12 months out. In this case, I've chosen the January 17, 2025 contract. So you can see this current stock price is about $56.10 right down here. Now, I personally am shopping for 80 delta. If you don't know what that means, it just means the probability, the percentage of profit here that your option will end in the money more or less by the end of the expiry date. And you can see we picked the 45 strike and it has an 80 delta. If I were going to go down to the 40, you will see that this is about a 87. Oh, it's not pulling it up anymore. That's great. So if we pull it up here, you'll see that the 40 is currently trading at an 87 delta, a bit too high. So I like to go with the 45s here. Now, the key thing with call options, guys, is your break-even price. This is extremely, extremely important, arguably one of the most important things when you're looking at buying call options, because if the stock ends under your strike price here, this whole $1,680 that you'll be paying will end worthless. So what I like doing here, guys, is I like to look for stocks that are relatively, that the difference between the price that the strike price of the option plus your premium is not too far away from the stock. So what that means, let's do a bit of math here, right? So 45 would be the strike price here. All you have to do is 45 plus the contract price. So let's take it right in the middle. Let's call it 1650 to make the math simple. So 45 plus 1650 would mean a break-even price here of $61.50, meaning at the end, so in January of 2025, if this stock is $61.50, this contract will be breaking even. You'll be able to sell it back to the market for $16.15 if it is at 61.5. That is what you call the break even. Now let's go take a look on the chart. Where is 61.5? Is it too high? Well, you can see, guys, that that's right up here. And I do believe that Fortinet will be able to get a bit above 61.5 in that time. From the current price, that is only a difference of about 8.5%. Now, obviously, this is a growth stock, so these break evens are going to be a bit higher. But if you go into stuff like Starbucks or really defensive stocks, sometimes you're able to find stocks with break evens that are quite close when you go, let's say, if you go in the money, you were to take these 42s here. Oh, it just logged me out. Let me log back in here, guys. Sorry about that. So as I was saying, guys, you can find some stocks, let's say like Starbucks, let's pull up Starbucks, because Starbucks is just the one that comes off the top of my head here. If you were to go to Starbucks and find an 80 delta call option here for 1 year out, let's do it together here, right? So let's go about 1 year out here, January 17th, 2025. Stock price is currently $96.45. So let's find where is the 80 delta. Let's go in the money to about $80 here. You can see this about 81 here. And you can see the price here, right? The midpoint of this contract, let's just take $21.50, let's say. So $21.50, you'll see that $21.50 plus 80, we all know that that's $101.50, right? So $101.50 off of $96.45, you'll see, right? Starbucks, right? Starbucks, the $101.50 would only be about 4.5% away. So you can see that Fortinet, for the same 80 delta, right? For the same 80 delta principle, well, Fortinet is about 8.5%. Starbucks, for the same 80 delta contract, I know the prices aren't the same. That's why The one common thing here will be your risk here. The delta down here, the 81 is what you want to look at. So for the same amount of options risk, essentially, Starbucks, you have a smaller break even in terms of percentage because the stock tends to move less aggressively than Fortinet does. But for now, we're taking Fortinet. That's the stock that I've chosen here. So in terms of that, if we go out to our January 17, 2025, I would be very, very tempted in taking this call option right here. The break even is relatively close to the stock price. The volatility historically is quite at a low right now. The VIX is low as well, and the stock is trading decently off of its all-time highs with great growth prospects. So that is just one example of a call option that I would be taking here. A second one would be Alibaba. So I've been playing Alibaba for a couple weeks now on the channel here. I do have an assigned put option at the 82, down to about 80.65 in terms of my break even. Now, let's take a look at the BABA contract. So BABA is very, very, very decently off the all-time high. Amazing growth prospects. The stock is obviously profitable. Everybody knows that. PE ratio is very, very low, and the growth in EPS is absolutely outstanding. And they are a very, very big player, in the cloud business as well. So I will be looking to take a play on Alibaba. Now, let's go shopping for some Alibaba options, shall we? So number one thing that we had to check the VIX. We know the VIX is low. Number two, we check, is the implied volatility over the last couple of months or years, is it relatively low? Well, you can see here that other than down here in 2021, the options volatility is relatively low compared to how it used to be in the past 2 years. So it's lower than all of 2022 and pretty much all of 2023 as well. It's way, way, way down here, guys. So implied volatility is low. Couple that with the fact that the stock price is also very low. The VIX is very low as well. So it means that we're going to be able to buy some of these options at pretty attractive discounts here. So let's take a look at Alibaba here. So Alibaba, let's go and find here our January 17, 2025 here. Let's go find our 80 delta strike, right? So let's call it, maybe it's going to be at the $55 range. Let's go check. 84, that's a bit too high. So maybe it's up at the $60 range. So 60 puts us right under about 79 here. So that's fairly decent here. But as you can see, Alibaba does have a bit higher implied volatility even than Fortinet at these prices. So our break even is going to be a bit higher, guys. So what we do for the break even, once again, we take $60 plus our options contract. Let's just call it $21 for simplicity here. So 60 plus 21, everybody knows that's $81 here. So our break even in 1 year, pretty much, the stock needs to be at $81 for us not to lose any money on this contract. So $81, the stock trades roughly around 74 right now. So how much of a gain is that? Well, you just have to put it all the way here, right? We go up all the way to $81, and $81, you can see that that would be a price increase of about 9%. So within the next year, Alibaba has to rise 9% here for us to be break even on this option. Everything else is obviously profit. So that is how I pick my stock option here. I like for the break even to be really no more than 10% over current price. That's fairly decent. And especially with these growth stocks, anything under 10% is a very, very decent bargain, guys, especially when we're shopping for very, very safe options, right? We're going in the money. So really these things have a very good chance of success, 80% probability of success here. And the rewards are obviously very good. Why would you do call options? Well, simply, guys, because number one, yes, obviously they move a lot quicker, but number two, they're a lot cheaper. So this all call option here represents 100 shares of Alibaba. Now, if I wanted to buy 100 shares of Alibaba at the current price, I'd have to pay $7,370 for them, right? But if I wanted to buy exposure to 100 shares of Alibaba through call options, well, it would only cost me about $21. So obviously that's a heavy discount here, guys, right? We're only paying about $2,100 instead of paying $7,400. So you're getting a real big discount here. You're only paying 28% of the price for the same exposure to the shares. So that's exactly what I want. That is what you call leverage here. So you're getting almost the same exposure. Well, you are getting the same exposure for substantially less money. This strategy works great on stocks that you may not be able to afford 100 shares of. Stocks that cost $200, $300, $400, $500 per share. Well, obviously 100 shares of those are going to be 20, 30, 40, 50 grand. And a lot of people don't have that. So that's when you do choose some call options here with the same strategy that I've outlaid right here. Netflix would be a very, very good target for me if I am looking for some big tech with a high share price here. So that's a bit about the call options and how I choose them. I will be making a more longer form video here for you guys. Been putting that together but I want it to be really, really good with great examples here. I will be going a bit more into detail here about how the option structure works. But that's pretty much everything for the call option segment, guys. I know there's a few of you that ask me, how do I choose my strike prices? Which stocks do I choose? Hopefully that gives you guys a better indication of it. So with that being said, guys, let's get right into our technical analysis now at this point, shall we? Now, guys, so you can see SPY here currently still trending up, but relatively overbought here. Now, what I did want to show you guys is, yes, the bulls are in full control here. Pretty much we are still looking for a daily higher low. I would exclude this day here because we did get a SPY dividend here. So if you see it on the futures won't show it. The futures just shows this beautiful uptrending chart. So this is a little bit of an anomaly. This is not your daily higher low. This is just a dividend being paid. So the higher low still says set at around the 454 area. Any pullback above 454 is looking for a daily higher low for further price expansion. Bulls are in absolute full control. The one red flag you have to look out for here, guys, is the RSI getting slightly overbought. So you can see this right here. If we go back in the past, you'll see that every time the RSI gets slightly overbought, right here, which is here on the chart, pulls back a little bit. Ever here, pulls back a little bit, right? So this is the beginning, obviously, of the August-September sell-off here. But if we go in a uptrending market, I won't take 2022 because that's a downtrending market. Now we're in an uptrending market. If we go back to all the way to 2021, let's say, you can find a bunch of these examples. This yellow line is the RSI where it is now. So you can see here, guys, right? Where we got overbought right here, it doesn't mean that it needs to sell off a lot, right? You can see, what did it do? Sold off a little bit, then went sideways. Then obviously we had a big correction here in November, came back. But just to cool off the RSI, it can just do slightly down and move sideways. We had another example right here where the RSI got overbought, and you can see what happened here on the chart as well, right? The SPY got overbought slightly on the daily RSI. What happened to the price at the same point? Went sideways. The little correction happened after, which brought us clearly down, and then obviously continues the little uptrend here. So I'm not really expecting some major pullbacks on SPY. It's just something to keep an eye out currently on, guys. And obviously the bulls are in full control at this point. Not too far off the all-time highs as well. The all-time highs are this yellow line up here. So we're only about pretty much 1.5% off the all-time highs. On the futures, it's even closer because we don't account for that dividend being paid. So on the futures, we're only off by about 1.25% here. So very good performance by the SPY. No red flags whatsoever. And obviously your weekly bulls are still in full control as well. No signs of red flags just yet here, guys. The main thing is going to be, once again, watch the 12 EMA on the 4-hour chart. The same thing we were doing this whole time here. Same thing that started the entire November rally. Keep an eye on this 12 EMA on the 4-hour. Moving down to QQQ. QQQ also showing no signs of slowing down. You can see we'll start on the 4-hour chart. 12 EMA looking beautiful. Bulls in full control. Nice little bull flag here Friday into today. Breaking bullish at this point. So bulls really not slowing down at all. Anything above 383, 384 going to be any pullback for a daily lower high for further price expansion. QQQ extremely close to the all-time highs, guys. Look at this, so close, right? Not even 0.5% off the all-time highs. Same rule with QQQ. QQQ is getting ever so slightly overbought. What I would like to see, guys, I would like to see a break of your all-time high and then consolidate and sit on it. That would be the best case scenario for the bulls, in my opinion. All-time highs very close. Would like to see this weekly uptrend really push this week past the all-time highs. Then we can chill out, come back, sit on it. It's called the good old breakout and then retest of this area as support here, guys. So QQQ, same thing, guys. Just look for past experiences when the RSI was overbought. So you can see back here in June, right? It was pretty overbought. Firstly, overbought all the way back here, but you can see consolidated sideways, went for another leg up. Now finally got overbought over here. This was this moment right here, slowed down a little bit, then continued to break out, right? So it doesn't mean that the market necessarily has to crash for you to cool off RSIs. Just means that it needs to have a slight cool down. We can see a few instances here in 2020 and 2021 as well, when we were getting slightly overbought, right? So June, this is a perfect example right here. We are at that level currently. You can see market pulls back ever so slightly, kind of sideways trading action, then goes for another leg up here, all while the RSI is cooling down. That's because you have sideways action. You don't have these vertical moves up that keeps pushing it up, right? So that's all really I'll be looking for here on the indexes, guys. Just slight little technical pullbacks. We are in a very bullish pattern overall here. So I'm expecting a break of the all-time highs soon. XLF financials. XLF doing a great job here, pulling back slightly on the day here, 0.16% to the downside, but XLF did exactly what I want SPY and QQQ to do. You see, they broke through this entire area of resistance. Now the bulls have all the time in the world to come back and sit on it and use it as support. So we're still looking for the daily higher low at this point. Anything above 35.70 is just looking for a daily higher low. This whole red area is going to be a beautiful area of support now that the bulls have broken through it. You have your 12 EMA down here in the 36.70s area. So if financials do cool down a bit, no red flags whatsoever, tons of space, even on the weekly, anything above 31.41, guys, just looking for a weekly higher low, right? So even if we do pull back on financials here for a couple of weeks, that's no big issue at all. Still looking for the weekly higher low for further price expansion in 2024. Financial is going to have a great area of recovery, in my opinion, with the rate environment declining over the course of next year. And financials obviously still well off their all-time high in relation to the other indexes, right? Still about 10-11% off the all-time high. Some names even more. Charles Schwab, my favorite financials name that I was calling all the way down here in the 50s for the longest time, well, they are still a good 28% off of their all-time highs. And this company just continues to print more and more revenue, very good net income, very, very solid margins as well, largely due to their trading business. And you guys know when the rates come down, guys, their trading business is even going to improve even more. People will go into more margin. People will start taking more trades. And that means more profit for Charles Schwab. Now, XLV Healthcare. Great job of pulling back by healthcare. While everything else maintains gains, healthcare is pulling back. This is the rotation that we were talking about, guys. So healthcare currently pulling back, guys. Anything still above 130, just going to be looking for a daily higher low for further price expansion. Coming back down, tagging this 12 EMA as well, coming back down. This is the whole area, guys, between these two yellow lines. Let me erase these ones down here so it's not too much for you guys. So we are in an area of congestion. You can see that in the past, this area has acted as resistance a few times, and that is currently what is plaguing the bulls right now. The weekly looks absolutely amazing, guys. So even if we do pull back to the lower end of this barrier right here, right, 133, even below that 132 area, our moving averages are slowly curling up. And I do think the bulls, if they can't do this in one shot like financials did, they'll have a great shot of two-stepping this into 2024. Bulls, absolute full control, no longer overbought on the RSI, just looking for that daily higher low for price expansion. If QQQ and XLF continue to pull back, I will be expecting XLV to take over and start making some of the gains as the market rotation continues. No red flags. IWM Russell. Russell still trapped in our resistance area, guys. I'll blow it up on the chart so you guys can see. Past 2.5 years now at this point of resistance. We were calling this leading up into this area, guys. It wasn't going to be an easy fight for the bulls, and it is proving to be quite the challenge indeed. After the FOMC, pretty much last Wednesday here, you can see that the bulls have been struggling to kind of push through this area in one clean shot. So they are very, very healthy still. Anything above 183.50 is going to be looking for a daily higher low for further price expansion. So bulls with a lot of space to give back here, guys. Wouldn't even be surprised if the bears come down and fill this little gap down here right around the 193 area. Bulls looking very healthy, guys. Daily uptrend is absolutely beautiful at this point. Just looking for a little pullback before a future rally higher here. And I do believe the bulls will be able to smash this area here within the next few weeks, up to a month pretty much. If we do have some weekly consolidation, let's say the daily, they lose the daily uptrend for whichever which reason, that would just be very healthy weekly consolidation, guys. Could be able to just pull back a little bit on the weekly here, sit in this area right here, and then move higher for the next leg up here into Q1 of 2024. No red flags on the Russell whatsoever. Russell still representing great risk reward, guys. Any pullback, in my opinion, should be buying for longer term timeframes here, right? Still about 19-20% off of the all-time highs. And one of our members here on the channel did point out here a very good play, TNA, which is the 3x levered version of the Russell here. That will also be the one that I usually play. It'll be the one, if I choose to go with shares for the Russell, this will be the one that I will be choosing to do it with. 3 times leverage. We are at the bottom of a cycle at an interest rate cycle high as well. So this is an area where you do want to be picking up growth stocks. You can see what this does. Usually when you start picking up at the bottom of some cycles, you can usually get some very, very juicy gains. The trick is you have to sell, guys, when these things go up, 2, 3, 3.5x there. When you've been holding them for 6, 12, 18, 24 months, you really need to pull them out and start rolling the profits into something decent, into something different, because you can see, guys, when these things drop, they drop a lot more than the underlying. So this will drop a lot more than the Russell itself. You can see that this is still down 67% from the all-time highs, even though the Russell itself is only down roughly about 20, right? So it's very tough if you get caught in one of those extended downtrending cycles. Even TQQQ for QQQ. QQQ is almost at all-time highs, guys, right? Well, look at TQQQ. It's still 45% off the all-time high. It's going to take a long time for it to catch back up to its previous all-time high. So you really want to, The timing on these 3x levered products, guys, is crucial. You want to be buying them at the low of a cycle. Now, the Dow Jones pretty much flat on the day here, maintaining its all-time highs. So Dow Jones, I mean, very, very healthy, guys. This is very, very easy technical analysis, as easy it can get, right? Daily uptrend continues to be confirmed at this point. So at this point, any pullback is just for a daily higher low above 36,000. Pullback, target your previous all-time highs. These two yellow lines I've drawn on the channel here are for the previous all-time high resistance area. In my opinion, that is a very good area where the bulls can pull back into for support. We also have your 12 EMA here on the daily. Bulls in full control, guys. On the weekly, any pullback, even if we lose the daily time frames, if we lose the daily uptrend here, no problem at all. This will just be a very healthy weekly consolidation move for the next weekly leg up here. Bulls in absolute full control here, guys. And the monthly breakout, you guys already know, monthly breakout is well underway here. So Dow Jones, no red flags at all. Bulls in absolute full control here. Crypto kind of moving a bit sideways here, so we'll go over it very, very quickly. We're still looking for the potential lower low on Bitcoin here. Bulls doing a great job of defending these previous lows, 40,400 all the way to 40,200. The analysis that we were doing here, guys, is were the bears going to go for the daily lower low, so daily downtrend, into weekly consolidation? Well, the bulls are playing good defense here. They are bull flagging at the top here, guys. Look at this beautiful tightening range here at the top by the Bitcoin bulls here. So Bitcoin may just be wanting to go up for a third leg potentially. If the bears aren't able to gain momentum and smash down, the bulls may be due for a third leg. Third leg is going to take us all the way to 46 to 51,000-ish. And at that point, guys, that is when I do think that the top of the monthly move may be setting in here, potentially due for some consolidation, maybe end of January, February as well. Because don't forget, guys, end of March and April is going to be fairly bullish for Bitcoin because we will have the halvening cycle. So moving into that, very possible we get a bit of consolidation here for the next month and a half here. And then in April, guys, get ready for that price to potentially come in. We do have the Bitcoin ETF, but that may be a sell the news event. So all relies on this area right here, 40,300-ish. Bears, if they gain that as a daily downtrend, well, the weekly consolidation just continues. Anything above 35,000-ish, just looking for a weekly higher low for further price expansion. Bitcoin looking very healthy, guys. The rest of crypto is pretty much following Bitcoin as well. Now let's move into our major tech stocks here. So Apple with a bit of a pullback here day today, guys, after some bad news here that the Apple Watches were potentially going to have to be pulled from sales for a bit as they're investigated for potential patent infringement. So all of that to say, guys, that Apple did have a little bit of red day here today based off the news, but the daily uptrend pattern is still intact here. Anything above 191.56 is just looking for a daily higher low for further price expansion. No real red flags as of yet. This is the line in the sand level. Lose this level right here, we may be due for a bit of daily consolidation. That would be fine, guys. We'd just be looking for a weekly higher low. Anything above 187.56 on Apple is just going to be looking for that weekly higher low as well here, guys, for further price expansion. No real red flags at all on Apple. Apple just struggling to really surpass its previous all-time highs here, but it should be just a matter of time at this point for Apple. Apple a bit too rich for me, guys, even if the bulls are in full control of everything, full control of this monthly breakout as well. Bit too rich for me here, guys, in terms of the share price, right? I would be more of a buyer down in the mid 180 levels. So remains to be seen if we will revisit those levels in the next few weeks, or if Apple just continues its march higher to the all-time highs. As of now, no real red flags. AMD consolidation, guys, sideways consolidation, right? You saw it here. This was kind of sideways and like up consolidation. Here we may get a bit of the same, guys. I'm not expecting that big of a pullback on AMD if we do pull back. If we do pull back here, guys, target 132 down to 126. This is my sweet spot for selling options. If we do pull back ever so slightly into here, I will be aggressively selling options in this pocket here. So as you guys see, right, we are currently in a very, very, very healthy daily uptrending pattern here. Obviously, it's a bit more like this. Now we regain the daily uptrend. We're just looking for that daily higher low for further price expansion. AMD looking very, very, very healthy, if I do say so myself. And on the weekly is looking extremely bullish, right? Weekly uptrend is confirmed. If we do pull back here, guys, just target this area. It's the previous 52-week highs. So any consolidation here, let's say we get extended daily consolidation for the next week or two as the rest of semiconductors maybe rotate amongst each other. Well, just looking for the weekly higher low for weekly price expansion into higher levels, guys. And the next area to be watching out for on AMD, the next leg up, guys, is going to take us fairly close to all-time highs. We're talking 148 all the way up to this guy right here, 156. Then it's your 160, 165 all-time high areas. Very, very bullish recovery by AMD. Would not be surprised if this continues. So I will be a buyer if we dip into the 130 range. Now, Amazon, guys, did exactly what we've been calling on the channel now for the past week. I was talking about this consolidation range here. Consolidation range, bears unable to really close much below the 12 EMA, sitting on top of our previous 52-week highs. Look at this beautiful sideways consolidation, tightening up with a bullish overall market. You knew that this bull flag was eventually going to break bull as long as the markets held up. That's exactly what happened today. We are getting our leg up. I also said it on the weekly, guys. This is a weekly bull flag for further price appreciation. Did exactly what it was supposed to do. Came down. This is the breakout of your previous 52-week highs, retest of the range, and now breakout to the upside here, guys. This breakout, like I've been saying, guys, this breakout wouldn't be surprised over the next couple of weeks. It takes us into the 160 area. 160 all the way up to 170 is going to be your target resistance for Amazon. So a very, very decent leg up, in my opinion, is coming for Amazon. No red flags. Companies' fundamentals are coming back to what they were pretty much pre-pandemic. Very, very good cost reduction by Amazon. They're done all their massive capital expenditures in terms of building warehouses that they've been doing in the past 2 years. So now return for their retail business to profitability. And they are obviously the cloud leader in terms of cloud warehousing and data services, even above Microsoft. So very, very good price expansion by Amazon. Bulls are in full control at this point. Any dip at all for a higher low above 143.60-ish, higher low for further price expansion of this daily uptrend right here. Weekly uptrend is now fully set in motion here by the bulls, so no red flags whatsoever. Amazon looking very, very healthy here. Now, Google, after having been pegged down for a while, guys, the rest of everything was running. Amazon was just chilling. Now it's Amazon's turn. Now let's move down to Google. Google recovering nicely here today, up about 2.5% here. So Google doing its best here to really try and set up a new daily uptrend. Google obviously losing the daily uptrend here after losing this pretty much higher low, set the down swing, but never set the down trend. So now bulls are trying their best. They engulfed, they set the daily higher low, and now we are trying to make a move here on the previous highs. 140 is going to be the target. Break 140, you have a new daily uptrend here. And on the weekly, guys, we're just looking for potential weekly head and shoulders, inverse head and shoulders pattern completion here. This pattern is a very bullish pattern, and if it breaks bull, you can be assured that the leg up past the shoulder here is going to be fairly aggressive here. We're talking, if we can break through this whole 140, 141 area, the next area, guys, is the all-time highs. 149, 150 is your target on Google. Still riding my 100 shares from 134 as a swing trade here. Bulls looking very, very, very healthy here, guys. Line in the sand, 131.18 pretty much. This can either go two ways. We're either going to set the daily uptrend right away, or we're going to continue here in a tightening range, kind of similar to Amazon here. And if it does turn into a tightening range, I do expect that the bulls are going to be able to really crush this to the upside here, especially if the rest of the indexes pull back and Google's able to stay relatively flat for a few weeks. I do think that Google is poised for a very beautiful run here, end of December or early January here. Very, very good on Google here. Very nice recovery. Now let's move down to Meta. Meta pushing 52-week highs again, and we were saying that on Meta here, guys, right? The 320 down to 310 area was the buy zone. Hope you guys were able to pick up a few shares. The weekly chart was really where it was at, guys. We were just looking for a weekly higher low. Touch the 12 EMA. 12 EMA has been intact all year. That's why I targeted that area, 310 down to 320, right? So we had the beautiful touch and now break to 52-week highs. Weekly uptrend simply continues at this point, guys, and now the monthly uptrend is very nicely in motion. Future resistance area stays put, 354, and then it's pretty much your 383 all-time high. So Meta closing in on the all-time highs as well. Daily uptrend is more than set here, guys. So, excuse me, at this point, guys, any pullback above 328 is your new daily higher low, right? Daily uptrend is set in motion. Any pullback, this is for a daily low, higher low above 328.65. And now that we're above this whole area of congestion, going to be tough for the bears to kind of get below this very easily here. So nice moving averages as support, horizontal support as well. So going to be curious to see if Meta can continuously churn up for this week and continue this weekly leg up. Seems to be poised to do that. No red flags on Meta whatsoever. Now moving down to Microsoft. Microsoft also trying to tighten up this range here and move north. This was the line in the sand, guys, 363, 50-ish, right? This guy right here was your line in the sand. If they broke that, then the bears would have had the potential for a daily downtrend. We would be targeting 355 down to 340. That was obviously your previous all-time high area, previous resistance area here over the course of this year as well. So I was looking for maybe a weekly leg down into that. It was just going to be a weekly higher low for further price expansion, but Microsoft seems to be wanting to hold that level. Still, very tight range here. So it's going to become kind of like Tesla, right? Draw two lines very, very, very simply, right? Break of 363.35, weekly consolidation continues here. Break of 377.29, if we get that upswing right here, well, the bulls will be able to set a beautiful daily uptrend and your weekly higher low will be set, and we will be looking for weekly further price expansion to the upside. So Microsoft looking very good. Bulls playing very, 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 very decent defense right here over the past 2.5 weeks of trading at this point. So we will see which direction this range breaks. Breaks bearish, doesn't matter. We have a buy point down here looking very, very, very healthy for weekly consolidation, for a weekly move up. But if you break the higher end of this range right here, 377.29, well, the daily uptrend is set and your weekly higher low is set. And we'll be looking for Microsoft to get to new all-time highs. Now moving on to NVIDIA. NVIDIA, all-time high range already, guys, right? So all-time high range is pretty much 505. Let's just call it 505. Daily bulls in full control at this point. Beautiful recapture of the uptrend at this point. Any pullback, if we do have resistance at the all-time highs and the price pulls back, any pullback, anything above 458, going to be looking for a daily higher low for further price expansion. Daily uptrend is in full control by the bulls, dealing with the all-time high resistance here. Moving averages are down here as well. Previous, right, this whole area right here, you see this beautiful area right here, support, resistance for a couple of days, now can come back, use this as support. That would be your 475-ish, right where the moving averages are as well. So if the bulls do pull back, target that little area right here for a potential retest before moving higher. Bulls in full control. Weekly uptrend is now in full control by the bulls as well. And the monthly, if we break the all-time highs, guys, this is a monthly uptrend. First confirmed monthly uptrend, since 2021. So keep that in mind for NVIDIA here. NVIDIA is still not as expensive as people think, guys. We did the math last week on a forward basis. NVIDIA's PE ratio for the end of next year is only 22-23. Not that expensive indeed. And if you don't believe me, guys, let's go down and do it real quick since we have some time today. So you can see this EPS expansion, absolutely ridiculous in the grand scheme of things comparatively to last year. End of 2024, 20.79. Share price right now, 500 divided by your end of 2024 EPS, 20.79, PE ratio 24. Not that expensive, guys, even if it's at all-time highs, despite how much it's rallied. So NVIDIA looking very, very bullish indeed. Not any red flags. Now moving on to Tesla. Tesla with a little bit of consolidation, but that's okay here, guys. Anything above 228.91, just going to be looking for your daily higher low. So bulls doing a great job here of setting a new daily uptrend, breaking above our upper bound of this most recent price range that we were kind of stuck in right here, right? So any move down, guys, just be looking for a higher low. Breakout, potential retest of the zone. If we do start retesting this zone, guys, I need to see the bulls hold this 247, 245 area. I will allow them to come down all the way to about 244, which is your moving average, right? This whole area is kind of a bit of a range. This whole upper bound, you can view it as a bit of a channel, right? So I need to see the bulls protect the upper part of this channel if we are to pull back here to really continue this daily uptrend to the upside here. So that's what I'm looking for the bulls. Got all the way as high as about 259 here today, but pulling back ever so slightly on the day to end the day here. Going to be looking for the breakout, retest, continuation of the daily uptrend. Bulls looking very healthy though. Weekly uptrend is now confirmed. This was a weekly bull flag sideways. It looks really messy, but it is indeed a weekly bull flag here. Got a nice weekly breakout. Now the weekly uptrend is set. So I will be looking for Tesla bulls here to maintain this weekly uptrend. I'd like to see them push all the way into the 265, 270 area, which is your previous area of resistance that we will be targeting here for the second leg up here on the weekly before potentially a bit of sideways consolidation. And then we'll be eyeing really the 290 to 300 range for the next break out to the upside here. On the monthly Tesla, I'll just remind you, got the monthly higher low here. We're just looking for the continuation here of this monthly uptrend here over the next 2 months, back all the way, trying to smash this 301 previous 52-week high. So Tesla looking fairly good despite the little pullback today. And now our two last ones, Palantir and PayPal. So Palantir here, guys, pulling back ever so slightly, 2% on the day here, getting kind of dicey here, guys, right? So daily downtrend was set by the bears. The bulls trying to get a little bit of a daily uptrend here going, but bears saying no, we are pulling back right away here. So line in the sand here still remains 1717 area, guys. This is the crucial area, right? So if you lose this, well, obviously the bears will regain their short-term control. We may get a new potential set of a daily downtrend here after the bulls try to make a chance. Well, the bears might just smash them here to the downside. If they do smash that level, guys, we are still looking for a weekly higher low. Haven't got it yet, right? So are still looking for weekly consolidation. That's why I need to see them hold this as much as possible. We are still in a weekly uptrend here. So we're just looking for the weekly higher low for further price expansion. Doing a good job defending this 12 EMA area as of currently. So we'll see, can the bulls maintain that lower bound right here? Palantir still looking healthy here for the next 6 to 12 months. I'm not going to lie. On the monthly, we do have a monthly breakout pattern here in store. So I am just expecting here, if what we're doing right now is simply a retest, I do expect December to potentially end fairly closer to the high of this month's candle here. So maybe making it back up to about $19, $20 if this stock turns around here in the next 2 weeks. If not, we will be looking to the months of January and February to provide some relief here, as we may be due for S&P 500 inclusion. We will see how that goes here. If they will be voted into the S&P 500, a lot of institutions will obviously have to buy shares. So Palantir, in my opinion, still a decent buy, $17 to $18. Obviously, the true sweet spot is down to about $14, $13. But as of now, price seems to be maintaining fairly well, especially last earnings here and their ever expanding book of contracts here. So looking very, very good on a technical basis here, guys. Still no real red flags as of yet. Right, just don't want to see the bears pull back too much of this here, guys. I would start getting a bit cold feet here if we do pull out all the way down to $16. At that point, the bears will have taken back so much of this recent bull move that we may be potentially due for a tightening range before further breakout here, right? So if you really want to see this trend continue in the normal fashion, they kind of need to put the brakes on right here. And this is why, guys, right, we've pulled back between 50 and 61%. So this is really the last stand for the bulls at this point to be able to keep this trend healthy, and we're able to recover right away. Any further than that may be due for potential tightening range. And now lastly, PayPal. PayPal, we were calling it last week on the channel here, guys. PayPal always gets 1 day up and then a million days of consolidation, 2 days up, a million days of consolidation, 2 days up, 5-6 days, obviously exaggerating here. But what PayPal did, breakout of the range, daily uptrend is set here, guys. Anything above 57.50 is pretty much just for a daily higher low. Looking for the bulls to sit on this previous area. Just use the top of my green box here. You can see challenging area in the past, right? Challenging as resistance, now challenging as resistance again. Blew past this whole $59.5, $60 range. Now going to be looking for the bulls to use this as support here. So just looking for a daily higher low, anything above 57.50, just for the daily higher low for further price expansion. No red flags on PayPal as of yet. Healthy daily uptrend. Bit of a recovery date here today in relation to last Thursday and Friday of trading here, guys. And on the weekly, once again, I'll remind you, we're looking to set a weekly uptrend here. So whenever this daily move is finished, I really hope that the bulls can get us all the way into the $65, $66, $67 range. Because if we pull all the way up there, that would mean that this entire weekly down move right here is now engulfed by the bulls. We could potentially cup and handle this and then make a break and get a nice weekly uptrend going, like the weekly uptrend we had right here. Potentially reset some of these longer time frames here, potentially even get some monthly momentum going on the chart as well, moving into the 70s. As of now, no red flags for PayPal, just a bit of consolidation sideways here. Look for this area to play as big area of support for the bulls. In my opinion, going to be tough for the bears to get through that without a fight here. That's pretty much everything I had for you guys today. Hope you enjoyed our little segment on options. I'll be dropping a longer form video on that. And hope you guys had a beautiful weekend once again here, guys. And I didn't forget you, the growth stock video is coming as well. I was supposed to have it up over the weekend, but got kind of caught up with some family events and whatnot for the holidays here. So please excuse me on that. It will be up here over the next 2 days. I'll be doing top 10 growth stocks, and we will also be dropping a video more specifically on call options and a bit more in depth on that. So I hope you guys are good. I will see you guys tomorrow after the close. Take care and peace.